Moving on, Nihal writes in through email and says that he's a senior citizen. He's buying an apartment in Bengaluru with a loan of 45 lakh rupees from SBI. Now, he wants to know what kind of insurance he should take for his loan amount. Which of the following should he consider? A single premium for the loan amount, a premium linked with EMI of HBL, term policy independent of HBL. I am assuming this is the home loan. When he says
probably
HBL.
The lender,
Yeah. Term policy with maturity benefit or survival benefit. What would you recommend, Harsh?
So first of all, I think being a senior citizen, presumably retired, taking a loan itself is something that he should think about.
Be worry about.
Second, I think at his age, any life insurance or disability insurance that he takes is going to be frightfully expensive. Besides being frightfully expensive, it may not even be available, especially if there are anything that is pre-existing, some pre-existing conditions are there. So in his case, all that I can say is, please find out what is available and what is the cost. I really cannot give you an advice because the choice itself is not available. I can just tell you one thing, just avoid the fourth, the life insurance policy with maturity benefit. That is a ridiculous thing to buy at your age.
Right. And what about the single premium for loan amount and the premium linked with the EMI? Now, premium linked with EMI also means that he probably would have to pay a lesser premium. If you could just explain, break it down what it means to Nihal as a person who will be paying all those premia.
So, let me explain. I don't completely understand the terminologies used by Nihal, but there will be two kinds of policies. One, where the value of the policy, that is the amount that will be paid to your family members should there be a death, that remains fixed throughout the tenure of the policy, one. Or second, where it is reducing, because as you pay off the loan amount reduces. So that is called a constant insurance and a reducing insurance. The premium payment again can be two types. One, you pay one single premium for either of those two policies, right, at the starting, and that premium typically is funded by the home loan company, and it is added to your loan amount and you pay it in easy EMIs. Or the other option is that along with your EMIs, you pay those premiums on a monthly basis through the home loan lender. I think those are the four.
So Harsh, here's my question. Now, Nihal, right, like he told us very clearly, is a senior citizen. So considering his stage, his life stage, would you recommend a one-shot premium or something that he has to pay on a monthly basis with his EMI? Because we are looking at probably a lesser premium over here if you take a monthly basis, monthly payout, but then there is a sum that you have to pay monthly along with your EMI, along with your installment. And here a one shot may look like a huge figure, but would you think it is more prudent to pay it and just move on?
I think in Nihal's case, none of these policies are going to be available. But let's answer this for other viewers. I think typically, if the policy is priced right, and most home loans are prepaid, I think about 50-60% of the home loans are prepaid, and what the policy will do when your home loan is prepaid is the key to deciding whether you should buy that policy or not. Because if you pay a single premium, you have paid a premium for the tenure, and if you are not going to get a refund of the premium or the protection is not going to continue, then that's premium wasted. And that is why typically, and most of the policies that the banks supposedly sell on a compulsory basis are structured this way, where you don't get back anything and the cover ceases if you prepay the loan. So this actually becomes a prepayment cost, which is not allowed under RBI regulations. This wastage of insurance premium becomes a prepayment cost, and that's why those policies are extremely expensive, and that is why you have to look at the policies before you can actually give a recommendation.
Right, so two very important things that we learned on Property Hotline today. One, of course, that it is not mandatory that you buy a life insurance policy or a home insurance policy from the bank that is giving you the home loan. You have the choice to go out in the market and take the insurance policy from whichever provider you deem fit. The bank, however, can make it mandatory that you have an insurance policy. That, of course, is a business decision that the bank takes. The other important thing is that when you do buy an insurance policy for that home loan that you're taking, ensure that you ask the question, what happens if I prepay my loan? If that is the case, what happens? Do I get back am I compensated for the amount of time that I'm losing out on? That is a key thing that you need to keep in mind when you do buy insurance policy on that home loan of yours.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.